What's up? What's up? Very choppy day. I'm going to talk about the setups that I'm watching going into the close. There's only about an hour and 20 left until the market does close. We are in a 15-point range, 14-point range, and half of our daily average volume with an hour and a half left. So let's wait for more people to get in here. And then I'll get into the setups I'm watching going into the close. I'll go into a trade that I took today, and then I want to get into recognizing these conditions, how to trade in these conditions, and psychological tips to trade better in these conditions. Let's see where we're at. All right. So first things first, just to get this over with, just in case it does happen, there's a couple things that I am watching on the S&P 500. The biggest thing for me today, and this was also in the pre-market plan, let me pull this up here. Hold on a second. Was to not have a bias. We had CPI data coming out tomorrow. So tomorrow the market is going to make a very large move. It's going to be volatile, and there will be most likely a large price swing. So most of the time, but not always, is the market choppy ahead of CPI data. The reason for this is a lot of traders are sitting sidelined. They're waiting for the news on how it's going to affect the overall market. They're not willing to invest. They're not willing to trade. They're not willing to risk money on days sometimes prior to the CPI data that we are very, very choppy. So going into the open today, we had a couple levels on watch, and they are still on watch going into the afternoon session, and I'm willing to take a trade based off of them. However, I need to see a couple things that I'm going to explain really quick. So the first thing is this 4142 level, which is a green line here. This level yesterday was an area that I can't pull up at this moment, but I could pull it up in the Discord because I think I posted a chart where we were spotting buyers yesterday at the lows at 4142 that I wanted to take the market long yesterday off this level. The market pulled back into this level, and we found buyers on multiple different occasions at this 4142 level, once, twice, and 3 times after breaking below it. So not only does it align with the previous lower day prior to that news dropping, because yesterday around 2 o'clock Eastern time, there was tons of news that got dropped, and we broke below it. And that was actually in our plan to watch a break below it and then come back above it to play it long. Just a little psychological point in the market. If we break a level and don't find acceptance below or above that level, it's a good sign the market could reverse. And that's what we did yesterday. So spotting those buyers at 4142 yesterday and seeing how the market bounced off of it on multiple different occasions. If we opened below 4142 today, which what we did, I wanted this level to now act as resistance. You could call it resistance, you could call it supply, whatever it is that you want to call it. The concept is going to be the same. It's an area that we are watching for selling activity. This also lines with 4150, which is this top of the box. I'm not going to necessarily call this supply. I'm just going to call this a area of interest. The reason why I have 4150 is if you were watching the tape yesterday, and I think I made a video or something where I explained there was over 10,000 lots traded at 4150. I don't know if it's a buyer. I don't know if it's a seller closing out of his short position. I don't know if it's a true seller. I didn't understand the context of it. However, since the market opened below that level at 4150, and if you have any order flow or tape reading tool, you can go back to yesterday's action on Monday, the 8th, And you'll know exactly what I'm talking about at 4150. Just look at the volume at that price. So I just made this a zone or a level of interest because of how we were opening below this level today, that I was expecting any rally into this level to fail and might offer an opportunity to take the market short. Now the problem with this, and exactly what I said earlier in this video, that we have CPI tomorrow, so the market tends to be choppy ahead of this. We also had areas that we found the buyers last Friday. And if you watch the webinar that I did on Sunday, you know exactly these levels that I'm talking about, and I made everybody aware of them. So now today, we're opening below this 4142 level, and we're opening above this 4133, 4125 level. So we're kind of in a rock between a hard place where we have sellers above us and we have buyers below us. So you got to ask yourself, what has the market done so far today? The most important thing for my analysis today, or actually let's go over what I want to trade, just because if it does happen, I want everybody to be aware of it. So from the pre-market plan, if you are a member of the community, you get these plans. We had a bullish and a bearish plan. Have no bias, just play levels. The bullish plan today was if we can get above that 4.2 to 5.0 level, that would have been the first step. The second step is if we take out 4156 with strong buying, then I want to take the market long. Essentially, what this means is yesterday was an inside day where we were contained inside of the previous day's range. So 4156 is the high of the inside day. Going over the context that I just explained, if buyers have the strength to find acceptance, which is step one to get us above 4140, 4142 to 4150, then going into the last hour and 15 minutes, because we only got an hour 15 to the close, then I'm interested in taking the market long, finding acceptance inside of this range, speculating that we're going to break out above 4156, targeting the levels that I mentioned in the webinar on Sunday. Now, scenario number two is what I want to make this video or this live stream about, because scenario number two is where I took the first trade today, and it's also something that I am watching going into the close. So scenario number two was if we fail at this pink box, or it acts as resistance, or stay below yesterday's low, I want to play the market short. However, we must take out that downside range that I just highlighted from Friday's action. The problem is I took the market short at 4140, and I'll even pull up the intraday commentary just so we could just review this a little bit together. And why I'm really not so keen in taking the market short at this moment is because of what I'm going to get into. So it's just follow along. It's going to come together. I took the market short, where was it? At 4140 at 1126. I was essentially selling the high a day at the balance range high. When the market is in balance, and I went over this in the webinar as well, the concepts that I go over on a daily basis, I repeat them every single day because they repeat themselves every single day in the market. So never fix something that's not broken. This was I'm selling the balance range high. Right? At 4140, the market came to the high. You want to fade the extreme, or you want to sell the rips and buy the dips in balance. My target was a 4133 break, and then if we break below 4133, I want to target 4125. Now, the problem with any trade today is look at what the market has done. Number one, look at the first range in the first half hour. From 9:30 Eastern to about 10:30 Eastern, the first hour is the most important, and we moved in a 11, call it 12-point range in the first hour of market activity. Directly after that first hour, the next hour, we were contained inside of that range. The next hour after that, we were still contained inside of the first hour long range, which is 12 points, which is insane. Point number two, look at the volume. Right now, there's an hour till the market closes, and we've done about half of our daily average volume. This just says there's not a lot of interest, and there's not a lot of participation in the market. So with this said, Any single trade that you take when the conditions present themselves to be balanced, or when the conditions present themselves to be lacking volatility and lacking momentum, you have to, and this is vital. If you decide to trade it, number one, I recommend trading smaller size. And number two, I recommend taking your profits very fast when you have them. I took the market short at 4140 at 1126 when it looked just like this, right? And I got out for a 2-point gain. I exited this trade prematurely because I was not favoring these conditions. Volume is dead, the market was too choppy, and all it takes is some guy to hit the offer for 10,000 lots and the market could go rally 20 points to the upside. This trade did end up working as we did sell off into my 4133 level, and I could have made 7 points on this, but looking back, it wasn't worth sitting here for another 2 hours to make 7 points and depleting mental capital. So when the market is like this and lacking the volatility, you got to take your profits fast and you got to adjust your size accordingly. If you're going swinging for home runs when the market is moving in a 12-point range, you're asking for losses which could be prevented. It's just, yeah, exactly. It's just not worth it, for me at least. So as far as the setup right now, despite the pre-market plan calling for 4142 rejection, I'm not so interested in taking the market short at this moment because this consolidation right here, I view it as bullish. We're building volume above the intraday high. We're building volume inside an area that bounced the market yesterday. However, I do view it a little too early to take the market long because I need to see strong volume on a breakout to the upside. Now, this is where trading kind of gets sticky, is because I don't want to call it that there's no right way to trade. However, there's no, how can I say this? There's no, you can make money with any way. So like right now, despite this looking bullish, I theoretically, and I'm not going to do this, could enter long right here at 4142. Put my stop loss, I don't know, let's just say below 4139, 4138. And I could get in kind of before the move, despite my confirmations not being strong. I could get in right now because my risk will be lower. However, due to everything that I just explained so far in this live stream, I'm not willing to take that low probability, low risk setup when the conditions are not favoring that. It just does not seem high probability. And it's okay to not take a high probability setup. Sometimes you could take lower probability ones as long as your losses or your risk is maybe, let's just say, a point or 2 points. I'm okay with downgrading my probability scale if my risk is, a point or 2 points and I'm risking maybe, I don't know, $1,000, and if I'm right, I can make 5,000 or 6,000. So same thing now for the short side. I could get in short right now, right? But the problem is if I get in short right now, look at all this buying activity that happens down here at 4133 at that level of demand. Look at all this buying activity. So if I'm short up here, number one, I got to look to take profits at this area because every time we come into it, we bounce, buyers start bidding the market higher up, and we find buying activity over here. And number two, if the market's at this area of resistance, you have to ask yourself, why is it not selling off, right? And if we were to pull up a profile of today, let me move this over here. Just move myself over. If we were to look at a profile of today, I mean, this profile is extremely balanced, right? I mean, look at the volume at price. And it's fairly balanced where there's no extreme. There's a 14-point range today so far. And then another thing, and this supported my full analysis so far today. Let me pull this up here. So to support this S&P analysis a little further, okay, and two, that's another thing. You could easily capitalize on, let's just say, a 3, 4, or 5 point sell-off, and that might be good for you, right? It's all about perspective. I could trade, let's just say, 50 contracts and be happy with a 5 point sell-off like we're seeing right now, right? Or I could be in with 10 contracts and want a 20 point sell-off. So it's all about perspective, your size, and the trade that you're looking to put on. As far as NASDAQ has been displaying strengths of relative strength. However, something switched up today. So if you follow me on my Instagram, I reviewed this setup yesterday where we bounced off this demand zone. This was also in the plan. This was also a level that was there before. And despite the drop yesterday on the NASDAQ, what I'm going to do, hold on a second actually, because the market is selling off. One sec. So exactly what I just said. All it takes is a fat seller to come into the market, hit the bid, and because of this low volume, which that sell-off was not even on high volume compared to what we see, that's all it takes is the market to sell 8 points down just like that. So that short could have worked. As I was just explaining, it could have worked. But from a probability standpoint, we're still above all this buying activity. Let me move this over again. We're still above all this buying activity over here at 4133. So no downside continuation is going to come above that. But so what I'm watching for now for the trade that I'm looking to take is this right here. So I just hope it doesn't happen before I explain it. Okay, so NASDAQ yesterday, what I'm going to do is I'm going to add a study. I'm going to go to compare with, and I'm going to overlay ES on this chart. So what you're going to see in the background now is ES chart. And I'm actually going to make it a candlestick chart. It's a little easier to see. So yesterday, it's kind of hard to see, to be honest. So yesterday, the NASDAQ had that afternoon sell-off around 2 o'clock, and we were nowhere near the low of day. Didn't even come close to it, and we found those buyers at the demand zone. Yet, ES yesterday, right? Despite finding buyers at that 4.2 level that I explained earlier, ES on that news broke below the low of day and immediately got bid back up. So the S&P is weaker, the NASDAQ is stronger. We normally don't see such a major divergence from what we've been seeing the past 2 days, especially with the S&P now opening below the previous day low, yet the NASDAQ bouncing off that demand zone that we bounced at yesterday, and today we were nowhere even or right at yesterday's low, but in the overnight session where the S&P was below yesterday's low, on the overnight session on NQ, we were nowhere near yesterday's low, and we were still holding and bouncing off this demand zone. So the problem with taking the market short for continuation at this moment is this demand zone right here on NASDAQ. So what I'm watching, and this could happen overnight, this could happen in the next hour before we close, this could happen tomorrow, is this little demand zone right here. If this level on the NASDAQ breaks while the S&P 500 breaks below, call it 4125 to about 4115, once this level breaks, then I'm interested in that downside continuation for shorts, targeting that 4100, 4105 maybe you could call it, depending on a lot of factors. It's hard for me to tell without seeing it happen. So that's what I'm watching for the downside. Now to the upside is this 4156 level. I cannot get too bullish inside of this pink box. It's just something that I can't do. It's going against my rules. It's going against the structure of the market. And despite you being able to make money on it for a couple points, it's not something that is a high probability setup that I'm comfortable going in with large size and picking a really good A+ setup. So everything in between that is noise in my opinion. Right? Because we got that drop from 4142 now, and now we're seeing a quick little bounce off that. Yeah, absolutely. Those two levels are exactly what I'm watching. There's not going to be a change. I just cannot play it long expecting continuation. I could scalp it for maybe 5-6 points off of this level. But I cannot expect continuation if my levels don't trigger that I just mentioned. I just can't do it. Especially based off the structure in the market. Yeah, I just went over those levels. If you got to go back and rewatch it, I'm not going to explain it again. And also, another thing is that, at least what I see a lot of people trying to trade in between or trade the chop or trade the mess, and they're forcing trades and they're taking unnecessary ones, and it messes them up mentally. Also, another thing that I do want to see, on top of what I just mentioned, of what I'm watching to take the trade wise, is the VIX. I want to see VIX, if I'm bullish, I want to see it take out this 19 to like 1850 mark. Need to see that. If I don't see that, I'm going to be a little concerned. If I'm bearish, I need to see it come back above this like 1960 to call it 20 level. I just need to see that. 1960 to about 20, to the downside about 19 to 1850. If I don't get that, then that move of continuation is going to be a little concerning to me. But we've moved in a 15-point range in, 5.5 hours of the market being open so far? 15 points in 5.5 hours. And my level of interest right now is 16 points away. So in the last hour, we would have to move double the range that we've moved in 5 hours. Is that a high quality one? I can guarantee you. And be honest with yourself, majority of the people watching this stream right now, I would say majority of them, over 50%, either lost money or took no trades today. Because people feel like they got to trade every day or trade every move, right? Oh, the market just sold off my 4142 level, right? Oh, we're selling off, volume's building. Let me get short at 4137, or let me get short at 4136. Okay, so now I'm short at 4136, right? Not recognizing all the buying activity near the lower day. Not recognizing I'm chasing a move on a range where we're moving at 15 points. Not recognizing where the daily average volume is 1.4 million lots. And today, for 5.5 hours, we've moved half of that daily average. So now, oh, I'm short at 4137, 4136, right? Now we're back up. People are taking those trades every day. Yeah, I have my alerts set for the overnight session, and I'll definitely trade overnight if the setup presents itself. Do I do it often? No. But if it's there, I'll do it. I've noticed a lot of good moves have been happening overnight, especially off zones. Intraday, I've been using really more of the tape. Yeah, all day I'm constantly watching the depth of market. I'm constantly watching the tape, all day. This gives me enough information that I don't even need to look at a chart. I could not even look at a chart and be able to take trades off of this just by reading these numbers. And hopefully that's the goal by the end of the new videos I'm going to add that everybody could do. And a rule of thumb for balance is you want to be selling the highs and buying the lows. If we break, let's just say, a balance range high and fail to stay above or find acceptance above that range, that's a reversal indication. Yeah, after CPI, if we break the support or the resistance, yeah, definitely, I will definitely take it for continuation for sure. I'm not going to go over the levels again. Your risk to reward comes from your first profit target, and everything above that first profit target is a bonus. Think about it. So like earlier, I was short off of 4140. My stop loss was about a point above the high, so I was risking about 3 or 4 points, and my reward was 4133, which is about 7 points away. And then anything below, since I was short, 4133 was an added bonus. So always calculate your reward where your target is, and then anything above that is a bonus. If somebody sees something that maybe I don't see, let me know in the YouTube comments. I don't see anything at this moment that sparks my interest. And we could take it long and it could go up 5-10 points and we could have made money on it. But was it a setup I was watching? No. Could I explain a little bit how I read these numbers? Okay. Don't want to get too in depth with it. What we see here, the VPS, the VPB is basically a volume profile. The red is a profile of all trades which hit the bid or aggressive market sell orders at that price. And the number is the number of lots traded at that price. So if we were to look at the lowest price today at 4132 or 4131, someone hit the bid for 115 lots at low a day. Same thing for the blue side. It's basically essentially market buy orders or trades which hit the offer. They remove liquidity. They are market orders. And the profile is the amount of lots or contracts, or if you want to call it shares, if you don't know future terms, at that price, and it forms a profile. The dark blue column and the dark red column is the level 2. It is the order book. If I go put a limit order to buy 1,000,000 contracts at 4136, you're going to see my order there on the level 2. They are all passive orders. Anything on the ask is a passive sell order. It's an order which sits on the offer. They add liquidity to the market. It's an order book. Price is self-explanatory. The columns RB and RA are recent order or recent ask and recent bid trades at that price. So it's just going to add essentially all the market buy or market sell orders at that price of the recent price action. VPD is essentially a delta. So what you would do is you would subtract all the trades at the offer minus the bid. So it's going to show you the delta at that price. So if you see a delta which is positive, you're going to have more aggressive market buy orders at that price than market sell orders. This is how you could tell if traders are trapped. If we're coming up to a high, let's just say it's supply or resistance, and a lot of people are buying that move up, yet the market could not move higher, and the delta is through the roof. It's a good sign there's a lot of trapped buyers at the high, and the market could reverse. The right column is just a session volume profile of bid plus ask, all the volume at that price. I'll make it clear because I see a lot of people talking about this. I only trade at my levels. Unless something new forms, I wait for my levels of interest to trigger. A lot of people don't wait. I'm patient enough for my levels because I have high conviction in those levels. I don't trade just because it's coming up or coming down. It might be boring. It might be not how you like to trade, but it's what works for me and it works for a lot of other people. knowing when not to trade is more important than knowing when to trade, in my opinion. What does everybody think? Let me know. I could probably make a poll, I think, on YouTube. I think I could make a poll. Yeah, I could. 0.3. I just made a poll in the comments. Let me know, are you bullish or are you bearish at these prices? Just want to see what a consensus comes to. Bullish or bearish? Yeah, overall market. Do I make more on shorts versus longs? I like trading the short side better. Because there's more fear, there's more panic, but I don't know. Depends on the conditions. Like right now, longs are paying more than shorts. But remember what I said, keep an eye on that 4125 to 16 level. To the upside, keep an eye on that 4156 level. 4158 level. Anything in between is a little bit of a noise. So always like look from right to left. A lot of people like to look from left to right, but sometimes go from right to left. And what we're going to see is, where are we currently trading at, right? We're currently trading in the middle of today's range, whereas today's range is still above pre-market low, still below pre-market high. Essentially, we're kind of close to yesterday's range as well. So there's no real range or development to the left of the chart that we could kind of base the analysis off of. So with this in mind, it's always going with new information that could develop, because there could be new information 5 minutes from now. And let's just say we're watching the tape and we see, somebody come in with 20,000 lots, lift up all these offers, and the market rallies 20 points. Well, that's going to give us new information to validate and base a trade off of. So don't just think that you come up with a plan and you have to wait for that plan to happen, which is what I recommend doing. But you must know that new information develops as the day develops. Like, to be honest, I wasn't really watching this 4133 level today. It was not something that was so strong for me, or it wasn't something that I really had my eyes on. But watching the action today and seeing all the buying at the lows made me be really serious that, okay, there's buying at this level, that any downside move today is going to be short-lived, still above that. Oh, man. Look at the profile, pretty balanced. We're inside of the middle of the range. I trade futures, I would say primarily just the S&P and NASDAQ at this moment. Just what I'm trading really well with. Stocks and options. I haven't traded options in a while though. But it's not about the tool. It's about the concepts. All right, this is a good comment. Somebody put... the bad economy, folks are losing their homes, interest rates are hurting, folks are spending more wisely, many banks are limiting withdrawals. I'm becoming more bearish each week. Nothing wrong with that. But if you are a short-term trader, that is more noise, and that's going to provide a bias to yourself. And you may say, okay, I'm bearish because of all these factors. Well, if you're bearish because of all these factors, you might miss a good opportunity right in front of you because you had a bias of being a bear when really the best setup might have been a long. So if you are a short-term trader, I wouldn't care so much about the economy or banks limiting withdrawals and stuff like that. That's just me. If you're more of a longer-term trader, absolutely. But the news is noise to me. This chart right here precedes all the news. When there's news coming out, you'll see the book get very, very thin. Yeah, just trade the chart. Yeah, if all this bad news is out, why is the market at all-time highs, basically? I mean, the NASDAQ is so close to all-time highs. And I've been on this live stream for how long? 45 minutes. The market has not gone anywhere. It has not gone anywhere. Where have we moved? Yeah, I could have got 5 points on a short. What you see in front of you in that present moment will be the greatest amount of information you could get. It'll beat all the news, it'll beat all the indicators. What you see in front of you will be the greatest indicator. And a lot of people want to think, or they see what they want to see. Oh, I'm bullish. Well, I'm seeing the market make higher highs and higher lows right now because I see the market going up. Not the right way to trade. Just look at the volume. 800,000 lots. I've been on this live stream for 45 minutes, and I think we maybe only put in 60,000 or 70,000 lots. That says a lot. Yeah, I took one trade. That's it. I'd appreciate it if you guys could drop a like on this video. We're at 270. Let's try to get to like 500. Drop a like. I would really appreciate that. How do I feel about pivot points? So, if they work for you, good. I don't ever feel bad about any way to trade, as long as it works for you. No, I shorted the 4142 level earlier. Just the downside was short-lived. Who do I have in Game 5? Warriors, Lakers. Look at the color of my shirt. Yeah, another way to kind of gauge, that's a good point, is go to a 1 minute chart. How you could gauge low volume and low volatility is look at like how small these candles look versus, I don't know. You know, versus like a day like this. Nice thick candles. We like a lot of thick things, if you know what I'm saying. So when the candles are thin, it's kind of obvious that the volatility and the volume is going to be low. Oh, man. Yeah, if you haven't seen my journey video, definitely watch that on YouTube. Market really hasn't gone nowhere. It'll probably move in the next 10 minutes. Would I ever do an in-person trading session for international students? Only place I'll probably go to is India. Get some nice chicken 65, tikka masala. Yeah, give it another 20 minutes and I'll probably move. Yeah, chicken 65 is the best. Now I'm hungry. To all the non-students of Carmine, go buy the course. It will be one of the best investments you can make. Appreciate that. Yeah, Popeye's my weakness. Man City. Yeah, probably gonna do like a Miami meetup. I would say in August, maybe September. What are the advantages of using the DOM in front of me? Well, you don't even need to use a chart if you use this DOM, and you could add more features to it. But this gives me enough information to know what's going on in the market. What we see on this screen, the information that comes about on this is what forms a candle. A candle doesn't form because of this. This formulates the candle. A candle shows this information. All a candle is data. How old am I? About to turn 20. Could you grow your account with $3,000 if you manage your risk well? You could grow your account with $1,000 if you manage your risk well. But I got the philosophy of you got to lose in order to win. And a lot of people are really bad losers. How about doing an account challenge? So, how I feel about account challenges, like a small account challenge, why would I do a small account challenge, or why would I decrease my size, my trading size, to prove a point? If I'm making good money, why would I size down to prove a point that I could grow a small account? I wouldn't sacrifice the profits I'm making now to make less profits to prove a point. Just doesn't make sense. You gotta be careful who does small account challenges. I can guarantee you they're more marketers than traders. But I mean, since we started this stream, the market has moved literally in a 5 point range, 6 point range. How could you trade a 6 point range if you're not scalping little micro moves? Yeah, key levels for tomorrow. This 4142, 4150. Gotta find acceptance above that. 4156 is key. That's the long side plan. The downside plan is if Nasdaq breaks that demand zone and the S&P breaks that demand zone as well, then I would be interested in short. But it's hard to sit on hands. I mean, I walked out of my computers 2 hours into the open today, 2.5 hours. No reason to sit here all day. Life is more important than the markets. Yeah, the CPI will definitely break the range. Absolutely. They're waiting for the range to be broken because of CPI. Yeah, the range is still 14 points. All right, I think I'm going to hop off the stream. I mean, I thought maybe we were going to get some more exciting action in the last hour, but there was no exciting action at all. You all know my levels now. I will post my plan tomorrow in the where is it? In the Discord. Today was a really hard day to short a breakdown, and I was really warning members to not short. Where is it? The market with the cues above its level of demand. Shorting it above the levels of demand is not high quality, and you need to see them break. And I think that's when we're going to get the sell off. To the upside, we need that strong buying above those levels mentioned. Somebody asked, "Is the Discord free?" Technically, yeah. I don't charge for the Discord itself. It's just a free community, but it is only available to members of the course. Because if you're in the Discord without going through the course, you're not going to be able to comprehend what's going on daily if you don't go through my video lessons that I created solely for the course. So the Discord is technically a private free community, but it's only available for members of the course. And every day I post pre-market plans, and I post commentary, breaking down what I'm watching, how I'm watching it, why I'm watching it, potential setups. Etc. But there will be more features implemented in it, like more live trading and stuff like that. More voice chat. I know a lot of people like it. Worth every penny, guys. If you are not on the course, you're missing out. Appreciate that. What's the difference between the two courses? The A to Z includes everything that I offer. Tape reading, futures, everything. And the supply and demand only goes over supply and demand. Course is worth every penny. Just buy it if you have not. Appreciate that. So here's the problem that I have right now. Let's just say the market breaks below this level that we keep bouncing off at demand, at 4133. If I short below that, then I'm chasing the move, because if I, let's just say, short at 4133, now I'm short at 4133. Our high a day is 4145. So that's a 12-point difference, because I'm essentially shorting the low on a day where we have balance, where the range was 14 points, and I'm shorting a sell-off 12 points from the high. So does that make sense? Not really. And everything that I'm saying could work out. And you could take it, you could make money off of it. But I know what works for me the best, and I trade what I know works, and I explain how I trade. It's just how it is. The course is too cheap relative to the information provided. See, comments like that is why the course prices will be raised for anybody pretty soon when I add those new videos. You bought into a $2,000 course for a very simple strategy. You learned the same thing that my course had and a hell of a lot more context. Yeah, probably because the guy you bought that 2,000 course from was probably a member of Investortrade. You will get more information from the course than you will anywhere else for the money. You've been at this for 8 years. You found me 2 years ago. It was a no-brainer. Appreciate that. Happy buyer protection. Yeah, if you want to upgrade, just message me in the Discord. I know this is case by case. I know this is case by case, but the money I used to buy the course only had a $2,000 account and you were able to make the money back. Appreciate you, Eddie. That's good. The Discord and the daily levels are worth it alone. Do I have any pets? No, I don't actually. When do I plan on increasing the prices? Pretty soon. Don't have an exact when, but pretty soon. Yeah, the videos that I'm gonna be adding, if you're watching this and you are a member of Investrade, the videos are gonna be insane. I've already planned them out, and they're gonna be insane. It's gonna change a lot of people's trading. Yeah, I'm texting the side piece. Yeah, believe me, I wish we could. I wish my levels could hit. My levels are not hitting. And I will not sacrifice taking a bullshit trade just for the live stream. It just doesn't make sense. I only take quality setups. But yeah, there's gonna be 2 minutes. We got MOC imbalance. So watch the speed of the tape at in what is it? A minute? A minute. Watch the speed of the tape. Watch the volume that comes in, watch the speed of the tape. 2 seconds. See how the speed changes? You saw that burst of speed? Nowhere. Muted reaction. How do I interpret all the trapped sellers between 35 and 38? Well, think about it from a context standpoint. If I'm a seller at 38 or 35 and the market's at 37 right now, I'm not really trapped. I'm down 2 points. If, let's just say, I'm short at 31s and the market in 2 minutes goes to break the high, then yeah, I'm trapped and I'm screwed. So the context is more important. If I'm short at 38, I'm up 2 points now at this moment. So I'm not really trapped. It's all about context. You know, we could see the delta for plus 870 up here. But what if that's a short covering out of a short position, which hit the offer, right? Context is more important. But yeah, delayed reaction. Market's definitely waiting for tomorrow. Tomorrow is going to be an insane day. If you are not prepared for it, I don't know what to say, because you're prone to blowing up an account if there's volatility. You're prone to large price swings, and if you have a bias, you're going to get destroyed. So please be prepared and please manage your risk. I hate seeing people blow up accounts because they're not prepared. You bought the course and made your money back 3 days after. Appreciate that. Awesome. Good to hear. Yeah, the future videos are in the A to Z. Yes. All right, I'm going to hop off here. There's really not much. My levels have not triggered. I'm not going to trade the chop. 850,000 lots today for 1.4 million. Very below average. Half the blow, or 50% lower than the daily average. And the daily average is also a low number. So that says a lot in itself. If you got value out of this, I would appreciate it if you could like this video. I never ask for likes, but if you could like it, I would appreciate that. And yeah, I will post my plan tomorrow in the Discord. I will get to working on these new videos. And now I'm going to go smoke a cigar and chill out, because the market will drain you. It's best to take time off of the screen, especially when your mental capital gets depleted and you're drained. You're not going to be able to make accurate decisions. But I'm ending that.